Well, the participant counts heading up.
Oh yeah, it is. At a pretty good clip.
Yeah, we'll go quick.
Did we, Tom, did we talk about doing questions along the way, or are we doing something at the end?
I think we're just doing them at the end.
Okay.
Thank you, everybody, for joining us. We're going to wait a few more minutes here as the room fills up. So we got a large group of folks that are going to be joining us for this webinar this morning. So just hang tight here for a minute or two. Thank you. Well, good morning, everybody. Thank you so much for joining the Lansing Regional Chamber of Commerce webinar series. Today's series is on maximizing your PPP loan featuring Rehmann. We're very fortunate to have Tom Shemanski, who's a principal CFO Services with Rehmann, as well as Andrew Rose, who's a principal for Rehmann that deals directly with commercial industry group. So today we're going to go through the PowerPoint. We'll have that up in a second here. In the chat box, you'll see at the end of the presentation, there will be an opportunity for participants, those on the phone, as well as the Zoom conference, video conference, to ask questions. The operator, myself, staff will work to make sure that we get every question answered by our presenters. If we do not, please email myself or these gentlemen on Rehmann, which will make sure following this email that you have their information if we weren't able to answer your question within this hour. But again, thank you so much for joining the Lansing Regional Chamber webinar series on Maximize Your PPP Loan. And with that, I will share the PowerPoint presentation and we'll get underway.
All right, good morning, everyone. This is Tom Shemanski. I'll be walking us through the first section of the PowerPoint presentation to talk about the PPP loan and forgiveness. At Rehmann, I serve in a role that a rapid response team. So we have a team that is on a call every morning at 8 o'clock, constantly monitoring changes with programs related to PPP and the various initiatives out there from the SBA. And so we're going to kind of walk through some things this morning, a little bit of information about Rehmann. Obviously, we have an office right in Lansing where Andy resides. I'm in the Jackson office, and I'm a firm-wide resource for our CFO Services group. So, all right, let's get into the slides. All right, so today we're going to walk through a number of things. We're going to talk about the programs that the SBA has rolled out. We're going to talk. We've got 2 or 3 slides focused specifically on forgiveness and what we know today, what we don't know. We're going to talk about the IRS, some of the implications of related programs, the impact on cash flow, and then we're going to talk a little bit about double dipping and which programs work together and which programs do not. So I'm hoping everyone already has who has an interest already has their PPP loan application in. As everyone knows, the first tranche of $349 billion ran out roughly last Wednesday. The new tranche of $310 billion was opened up at 10:30 a.m. yesterday. Can't stress enough if you already have your application in, you should be pushing or working with your lender to make sure you understand where you're at in the process, and if you have all the pertinent information, and it's just waiting for SBA submission. Last thing you want is to have something kicked back on your application at this point and have to go back to the end of the line because the expectation is that this new $310 billion will be probably processed anywhere from probably 3 to 5 days. We expect it just to be gone through and to be fully used. One thing related to the program that just wanted everyone to be clear on is that 75% of any loan proceeds has to be used on payroll, defined payroll related costs, which does include things like your employer health insurance component, your retirement insurance component, and some of your state and local employer taxes, like your SUTA, your state unemployment tax. Another program that has the SBA rolled out in conjunction is if you have an existing SBA loan, a 504 or a 7A type loan, there is a 6-month loan forgiveness option on the table. So you really don't have to do anything other than talk to your lender and make sure that they're applying the program. And I mean, what that's going to give you is 6 months where the SBA is going to make your payment for you. So that is a very significant relief if you've got an existing SBA loan out there. The other one that the SBA has rolled out is the expansion of the economic injury disaster loan. Again, this was another program that ran out of funding relatively quickly. It allowed a $10,000 quick turn grant or advance on a loan, and then you could apply for loans for up to $2 million. That program is still not taking applications. There was $60 billion of additional funding approved in the last round. They're currently working through existing applications. So there's some question of when that's going to open back up, but that's another one on the SBA site that you can keep a close eye on. And if it does open back up, it's another good program to put in, and it works. It can work in conjunction with the PPP. It's just the use of proceeds should be different. So if the PPP is focused on payroll, there's vendor payments, there's other things you can focus with on the disaster loan, inventory, things of that nature that you could use those funds for if you need. Next slide, please. So, this is what we've been dealing with as, as a firm since this announcement came up. You know, the tax returns have been, you know, pushed to the background, and everyone's been jumping on this PPP loan application. So everyone's kind of fighting for information and fighting for, you know, getting their applications in, and now we're shifting to this forgiveness. So it's been quite the journey for a lot of us. Next slide, please. So I think, you know, I don't want to spend a lot of time on this, but I think everyone probably at this point has a pretty good understanding that the PPP loan is at a high level 2.5 times your average payroll cost for either prior 12 months or 2019. You know, there's certain eligibility requirements as far as being less than 500 employees. And so really it's a program that's being administered by the banks. As you know, you've had to work with your lender to get your application in. And really we're going to focus on the forgiveness part of this program. And you know, at a high level, you know, it's been laid out as the 8-week period after you receive your loan proceeds is defined as the coverage period. And that's a period where you're going to generate your loan forgiveness calculation. And it's really a combination of, you know, the 75% that you're going to spend on payroll. It's actually tracking those expenditures for your payroll, your healthcare, employer portion, your retirement. You know, at this point, you know, there's not a lot of guidance on the forgiveness. You know, we're assuming a lot of the information that for the loan application was cash basis. We're assuming the same on the forgiveness at this point. But during that 8-week period, you're going to aggregate all your costs in these key payroll areas. And what's different on the forgiveness side is they've expanded the forgiveness to include non-payroll areas, things like rent, utilities, mortgage interest, interest on other personal property type loans, and you're really able to include those things as well over that 8-week period. And then there's a number of tests that you need to walk through, full-time equivalent test, excess wage test, to get to your kind of net forgiveness number. And that number then is, you know, all those numbers get you to a net forgiveness. And so whatever is not forgiven is a 6-month deferral with no payments on a 24-month program, you know, loan at 1% interest. Next slide, please. Now, there is also the option for the self-employed to also fill out this application. And so, you know, those are these folks are the ones that kind of are in the lurch right now because they weren't eligible to apply until the last couple of days before the program ran out of money initially. And so there is going to be a lot of, it'll be interesting to see how much of the self-employed segment can actually get their application through, depending on their lender and depending on how much of a backlog they've got. But there is, you know, the self-employed can use their 2019 or an estimated 2019 Schedule C to generate a loan through the PPP program. You know, if they have employees, that part of it runs the same. It's just the self-employed can use their Schedule C to generate up to that $100,000 component of a PPP loan. Now they do not. The self-employed aren't allowed to include their health insurance or their 401k. It's just on that Schedule C basis. So, next slide. So now we're going to talk a little bit about kind of the forgiveness specifically, and I think, you know, there's there's some misconceptions out there that, hey, you know, if I have people on payroll and I'm making all my payments on payroll, then yeah, I mean, most of my loan will be forgiven as long as I maintain my 75-25 split between payroll and non-payroll. I mean, I'm assuming most of my loan will be forgiven, and the initial answer to that is, well, not necessarily, because of these tests and these reductions. You know, there's these potentials that will reduce the amount of your forgiveness. So again, when we looked at those categories, you know, I'll define those as kind of the gross forgiveness numbers, right? You're going to add up everything you spent across those payroll and non-payroll areas over this 8-week period. And then that kind of gives you a gross number. But then there's these various levels of reductions that get to your net forgiveness amount. The first of those is an excess wage. So similar to on the application, any wages in excess of $100,000 on a prorated basis will be excluded, from forgiveness. So again, if you're on a weekly payroll, you're going to take that 100,000 divided by 52. Anyone that you're paying in excess of that prorated basis, that excess amount is going to get excluded. There's a full-time equivalent test. There is a prior period which is defined as either February 15th through June 30th of 2019 or January 1st, 2020 through February 29th. Though that's your prior period that you're going to compare to your 8-week coverage period. And if there's a reduction there, that's a straight percentage reduction to your forgiveness. So for example, if you had 100 employees, during one of your prior period tests, and then you had 50 during the 8 weeks, and assume you made no changes, you just held steady at 50 because your business was down in volume, that would be a 50% reduction. So it's a bit of a double whammy, because one, you're spending less in your 8-week period, so you're not able to generate enough forgiveness. But then on top of that, the amount you spent is going to be reduced as because you didn't maintain. There's a similar calculation on a 25% wage reduction. And I will say that the full-time equivalent test and the 25% wage reduction does have a rehire or a cure function to it that will allow you to try to rectify and eliminate the percentage of forgiveness. And we'll get into that in a second. But essentially, the 25% wage reduction is just saying that, hey, if you paid someone less than 75% of that first quarter earnings level, then that amount on a per employee basis would have to be added up and included as an offset to forgiveness. Now, this does include anyone that had a paycheck during 2019 that on a prorated basis was more than $100,000. So at this point, this is an area we're hoping for some better guidance, but at this point, the way it's defined is you really have to go through every paycheck for all your employees for 19. And if someone's making on a pay period more than 100,000, that would allow you to exclude them from this test. But in at a high level, this wage reduction is, if you paid someone, $5,000, you could pay them 75% of that and still be fine within the bill. If you pay less than 75%, then on a per employee basis, you're going to add all those totals up, and it's going to be an offset to your forgiveness. Now, again, both the full-time equivalent test and the 25% wage reduction there is some rehire language in the bill that says that if you rehire people and get back up to your prior period number by June 30th, that can be included in your full-time equivalent test. And also with the 25% wage reduction, if you cure that by June 30th, you can eliminate those reductions as well. So we are looking for additional guidance specifically on the wage reduction on what the impact of that is from an hours basis versus a wage, purely an hours basis versus wage rate basis, on whether that's truly a wage, reduction at that level, and how do we exactly cure that? Does that mean that we have to, pay them more over if they came back to work for the last 4 weeks? Do they have to be paid more or receive a lump sum to cure that for the 25%? So that's kind of what we're looking at from a mechanic standpoint for further guidance to understand exactly, how that's going to be calculated. Another reduction is if you did get the disaster loan $10,000 grant, that is an offset for forgiveness since it's already $3. And if that's used, that's just one of the double dip features that the SBA had put in, that if you get that, it's excluded from forgiveness.
Hey, Tom.
It's a deduct. Yeah.
Is that FTE test? Is that 30 hours or 40 hours?
That's one that hasn't. They released guidance on the 26th that basically said on the application you count head count. So if you had, their example was that if you had 200 full-time and 50 part-time, for the application part, that means you have 250 employees. But then it said, but the forgiveness will be calculated on the full-time equivalent standard. And to be honest, there's not, within the bill, there's not clear guidance on exactly what that standard is going to be. So some people have referred to the Affordable Care Act. Some people have referred back to prior SBA programs. But I do think that's one of the first things they're going to come out and say that, hey, here's how it's going to be tested. Is it going to be 30? Is it going to be 32? Is it going to be 40? What is that test going to actually, be based upon? So that's one of the guidance areas we're looking for.
Sure. Yep.
And then, the non-payroll costs are capped at 25% of forgiveness. So you're limited on spending the dollars, no more than 25% on non-payroll, and the forgiveness is capped at 25% of total forgiveness. So as you can imagine, this calculation gets rather complex when you start with a gross forgiveness amount. You run through all these various potential reductions, and then at the end, you have to be sure that your non-payroll costs are only 25% of total forgiveness. So this is an area that is going to be pretty detailed as far as what you need to do for record keeping and how you need to stack up these tests and these measurements to get to a final forgiveness amount. And again, the SBA has kind of defined the process that, once your 8-week coverage period is done, you're going to submit all your forgiveness calculations and supporting information to the bank. They'll forward it to the SBA, and then within 60 days of receiving it, the SBA will then give kind of their final verdict that this is the exact amount that's going to be forgiven, and anything left over, will be a loan. And but that, these are some of the, and I know the title of this was, maximizing forgiveness. And I know I modified our front page to more of understanding forgiveness because, there's still a lot of gray areas that I think are really preventing us to focus on maximizing because we just don't have clear enough guidance on exactly what is going to be acceptable and what isn't. And that's a good lead in for the next slide.
As we've joked before, we certainly need more forgiveness.
So we've been getting just tons of questions from our clients on what can I do and what can't I do during this 8-week coverage period. And, I think unfortunately with the lack of guidance, there's just a lot of these detailed questions we just can't clearly answer, and I just put a sample of some of these questions that are coming through. So we can kind of maybe head off some of them towards the end because, things like, hey, I need to pay my hazard pay. How much hazard pay can I make to an employee? Is a 10% bonus or a 30% bonus or a 50% bonus? Is that all fair game? To get more money into my employees' pockets? Can I catch up certain maybe payment deferrals I received during the 8 week? Could I have 6 rent payments in that 2-month period? Could I have 4 health insurance payments? What's the definition of utilities? Is my cell phones are really essential? Is that a utility? Is my security system utility? There's a term of transportation in the utility section. What exactly does that cover? Is that my delivery truck? Is that just transportation related references on my bills? What if someone doesn't come back to work and I can't rehire a replacement in the 8-week window? Can I exclude that person from the FTE calculation? So I think there's a lot of these specific questions that, there's the bill is written at a fairly general level where there's just not the answers without further guidance. I think what we've been talking with a lot of our clients has really been, just try to be consistent, use reasonableness to get started as you get your funds. And then as we get further guidance, we'll be able to navigate more effectively because especially smaller businesses, where they're looking to maximize dollars and maybe there's a spouse that's always kind of helped at the business, really hasn't taken a paycheck, but, can they start taking a paycheck now? Or maybe, someone that, they got certain employees that, were making, $40,000 a year and they're like, well, geez, why don't I just pay them $100,000 for the 2 months. They've done a great job, and it could all be forgiving. Can I do that? All these kind of questions. I suspect we'll get a bunch of guidance from the SBA on kind of the do's and the don'ts and what's reasonable and what's not reasonable. And so I think, it's very tough to be patient in times like these, but it is something that we really need to be at this point, because there's just not enough guidance on what we can and can't do at a granular level to be able to answer these questions. So I think we have a good understanding of kind of the high level, the conceptual idea of what they would like these calculations to do. And it's to really enhance people, to bring people back to work where they can, and to get those dollars paid out and have those be forgiven. But just like with a lot of programs, intent and then execution of that intent sometimes are harder to accomplish. So let's head to the next slide. So we also get a lot of questions about tracking and all things that we should be doing to maybe comply. And I would say in general, there's nothing specific written into the bill as far as this has got to be in a separate account. This has got to be, segregated funds. I think there's a couple things that a number of our clients have kind of started down the path, which I think will be helpful for some level of segregation and tracking, to answer the question of, hey, how can you demonstrate that you use 75% of these for payroll costs, for example? And a couple things is some clients have savings accounts. They're just putting the money into the savings account, and then each week they just kind of look at, all right, here's my payroll, here's my rent, here's my utilities, here's my health care, and they just kind of transfer that amount into their operating account each week. So they kind of, it gives them their visibility on how they're drawing that loan down, kind of gives them some visibility in how they're doing on their 8-week timing. Are they going to have this thing drawn down over 8 weeks? If you don't have another bank account, another option is a separate general ledger account where they're simply, sticking that PPP loan in a separate cash account, general ledger account, and then doing the same thing. They're just transferring dollars back into the general account as they allocate. And then they're putting the support documentation. I think that's going to be important to make sure you keep copies of, everything, your payroll registers, your utility bills, your health insurance bills, your payroll detail that shows the employer versus employee contributions for healthcare, retirement, any kind of, interest statements or loan, payments that you're making for your mortgages or your rent or your real property type interest on your loan. So, it's important to kind of keep that documentation as you go and track that, so you can kind of see how it's going. And if you're on something maybe like a QuickBooks or something smaller type of system, you can maybe use a class or a project, something to designate costs as they're coming through your general ledger too is another idea, maybe for helping you to aggregate and identify your PPP expenses. So
for those that just to interject, Tom, for those that have project costing, I've heard of some businesses setting up a particular job. So if they manufacture, or if it's a construction company, setting up an actual job number and categorizing those costs into that, which I thought was a pretty interesting way to capture those costs. So again, whether it's cash basis or accrual basis remains to be seen. But
yeah, and then I think those are some things you can get started on now as your PPP dollars are coming in, and then I think after this next round of funding is done, and if all the dollars are allocated and there's no near-term granting of additional dollars, I think you'll see a lot of the lenders and banks then shifting towards the forgiveness and getting their internal system set. So give it a week, and I think once you then start to reach out to your lenders and say, hey, what are you guys thinking? Because what we've seen on the application side is that each organization is going to have their own kind of procedure and processes that fits their organization. So it'll be important to reach out relatively soon in the 8-week period, maybe after this next week or something, and start to talk about what's been defined, what are the expectations that the lender is going to have for submitting the information, is it going to be all, uploaded, or how exactly is that going to work? And that'll help, again, kind of round out your strategy, kind of for collecting costs and getting some of that information. So next slide, please. So, as I mentioned, there's a lot of gray areas that are making it hard to focus specifically on the execution of maximizing the loan. But there were a couple areas that I thought, we would just, highlight or talk about. And it's a big one that I'm getting with a lot of clients is, as the stay-at-home order extends and I've got my money and I just don't have the ability to bring employees back. A lot of folks, laid off a certain amount of employees when the stay-at-home order went into place well before, this bill was released. And so, there's concerns about, well, what if my employee, they don't want to come back, or they're limited. That's an HR specific question on, what they can do, what they can't do. But that, that's an issue that needs to be addressed. What if they don't want to come back because they're on unemployment, right? So now here's a situation where, you don't have the work, you'd like to maximize forgiveness, which means that you should bring them back, but they're on unemployment, they'll make less. If you bring them back, they're going to be unhappy. And so, these are the things that, mechanically you got to kind of work through different scenarios to understand, again, what's best for my employees, what's best for my business, and how do I maximize forgiveness? Those things all need to take into consideration. And I mentioned it earlier, it's just, some of these tests can really hurt, the amount of loan forgiveness, and particularly, those folks that have a lot of people, that aren't working and haven't brought them back, and they're not generating those forgiveness, but they do have a core group of people that they need, that forgiveness will be impacted because you won't meet some of these other tests. And so that's the process. I think that I'm hoping that the initial guidance that we get will really kind of hopefully clear some of that up, so we get a clear idea of what these tests and the impact on the forgiveness is. I mean, we kind of understand it conceptually, but this whole 630 rehire potential and how can we, maximize forgiveness within the two rules based upon rehire, I think those mechanics are coming, and that's what we're going to have to really have a good understanding, because I think that aspect right there will be what drives your ability to maximize forgiveness. Just some other things to consider is, let's say you come back up to work, June 1st, and you still have 4 weeks. Would it make sense for you to pull ahead some work? Could you build out some of your July or August demand, or perform services that you normally do in July, August? Could you get those pulled ahead and done? Even if you offered some of your customers some 30 extra days on their payment if they pulled it ahead a month, just so you could get some more work done in the month that you have your 8-week coverage period. So same thing internally. If you're looking at your staff and you're like, boy, we got some projects that maybe it would make sense to make sure everyone's back and we're fully geared up as much as we can on a couple internal projects that we know will help our forgiveness calculation and yet drive value into our business. So those are some things that will come into play. And then I think it's just like you just keep you all have to run your businesses, and so you got to look at loan forgiveness in context of running your business, and how long will it take for your revenues to return to normalized levels, and the PPP dollars you're committing to use them on those payroll and specific defined non-payroll expenses in that 75-25 period. But if you don't use it all in the 8 weeks, it does convert to a loan, a 1% loan over 24 months with 6 months of deferral. So sometimes you have to look at what's best for my business. Is it spending that on to maximize forgiveness, or do I really need cash in the business over a longer period? And does this loan aspect make sense, particularly if you have a lot of folks on unemployment that aren't going to be real happy with you if you bring them back off unemployment to make less money. So those are kind of things that I'll say they really fall under the heading maybe maximizing the program, which doesn't necessarily mean maximizing forgiveness. And so I think those are all the things that, as a business, you're evaluating concurrently to see, what are my right next steps. So next slide, please. So when we talk about those next steps, this is really where cash flow management becomes really important, because you got to be able to understand where your cash position is now, what your projected cash period position is going to be over, let's say, the next 13 weeks as your business starts to go back to work, and then how does this PPP loan really fit into all of that. So next slide, please. So, for those of you that aren't running a 13-week cash flow model, some type of spreadsheet that's really tracking, this PPP funds is, it's a great model to have or put in place to help track, how the PP funds is going to impact your cash flow. But probably more so, if you run it out 13 weeks, you're going to see what your 4 or 5 weeks after your 8-week period looks like. So again, if you're not familiar, 13-week cash flow is kind of an industry standard on the banking side. When they kind of were looking for information on how to support their clients, it'd be common for them to ask for a 13-week cash flow. And it's really an integrated model that it's cash based versus income statement based, and you're really looking at what are my fixed payments, what are my loan payments, what are my material payments, my payroll, how am I paying my AP. And it's really a tool that helps you manage your cash flow on a forward-looking basis to help with your decision-making on how to maximize the dollars coming in for PPP, and really what your longer-term plan looks like. Next slide, please. Oh, I think I need to back up one. You skipped. So really, again,
advance one.
There you go. There you go. Perfect. It's really just, if you're not familiar with a 13-week cash flow model, it's not a traditional cash flow statement. It's dynamic. You customize it for your business. You're looking at a 13-week time horizon, and really your accounts agings and your account aging for receivables and payables. That's really driving your 4, 6, 8-week outlook. And then you're really looking at your sales pipeline, your plan expenditures to really round out to get this 13-week. So you're kind of integrating what you know and what you're expecting into this 13-week horizon. And you can layer in your PPP loan and kind of see how you draw that down into those specific payroll and defined non-payroll costs. And it really should show, how it's going to enhance your cash position, over that 8-week period. And then pushing it out to the 13 weeks then really allows you to say, okay, now the PPP loan period is done. Now what do I do? Because if let's say you brought a bunch of people back by June 30th and made some payments to satisfy those forgiveness tests, you hit July 1st, and what if my business is still 30 or 40% down? What do I do then? Who can I afford to keep? So having this cash flow kind of visibility is going to be really important to understand how you transition from this PPP 8-week coverage period back into your normalized business operation, where you don't have the support of this program and the backstop against some of these wages. So it's going to be really important to understand how those next 4 weeks after the 8-week coverage period is really going to look for your business, and continually dialing in your forecast as you get closer to that time frame. So that kind of wraps up my part of the presentation on the PPP, kind of some loan forgiveness issues to consider and understand, and then really, how that really drives business decisions, and using a tool like a 13-week cash flow to model out some scenarios and model out where things are heading, so you can prepare. So because these are all, at the end of the day, they all kind of come back to what do I need to do as a business to be, successful here during these very dynamic, challenging times, and maximizing these tools like the PPP is going to be critical. So because once you get it and you use it, it's gone. So you're going to want to be sure you use it as effectively as you can for your business. maximizing forgiveness where you can, and then just understanding what the loan implications are if there is some amounts that weren't forgiven. So with that, I'll swing it over to Andy to kind of run through the balance of some tax issues and some other things that can be helpful to help navigate through this process.
Thanks, Tom. Go ahead and advance. Advance again. All right. So we, of course, are busy with all the COVID-related, the PPP and trying to figure out how to keep business open and when it's going to get back to running and all that. And of course, a big help for everyone, including businesses as well as us out in the the preparer world, preparing all these returns. We've gotten relief on the due dates. And so, anything that would have been due April 15th is now, of course, due July 15th. And that's, whether it's a filing of a return or paying a balance due or both. So that was extremely helpful. And so originally there was going to be some limitation on that, but there is no limitation. So whatever you may happen to owe with that 2019 tax return, you now have some additional time to make that payment. This does apply for any of those out there that are making quarterly estimated tax payments. That's included in that. So, your first quarter estimated tax payment is always due at the same time your return is due. That's due July 15th. And then, of course, second quarters are due June 15th. Those are both now going to be due on July 15th. During that period of time, and only during that period of time, will there be an abatement or non-calculation of interest and penalties on those amounts that would have normally been due. So, a question that's come up before is, I didn't make any estimated payments during 2019. Does this mean I don't have any underpayment estimate penalties or interest? Absolutely not. It just means that during that period of time, from April 15th to July 15th, there won't be any interest or penalties accruing. This all came out on notice 2020-23. And not only did it extend the filing and the payments, but there were a number of time sensitive type things that got extended as well. One of those things would be if you happen to have a like kind exchange in 2019, you got more time to comply with the election for that. Anybody making an opportunity zone election, you got more time to do that. There was a host of different things in there. So if there's something that you had due on April 15th and you're uncertain as to whether that got extended, just reach out and we can help you with that. Next slide. Okay, so you can't talk about PPP without talking about the implications. So, there's things in here that in the CARES Act that you choose to go down one road and it prohibits you from going down another road. And one of those things happens to be the employee retention credit, which would be the 10,000. It's 50% of your wages up to 10,000. You get a tax credit for that. So, a $5,000 tax credit if you happen to get to 10 grand on an employee. So you cannot do that if you were able to receive PPP funds. So you're prohibited from using that provision of the CARES Act. You can, however, and this has been a question that's come up a number of times, can I delay my employer payroll taxes if I've been successful in getting a PPP loan? And yes, you can. You can delay up until the point where you are notified that you have an amount that has been forgiven. So once the bank gets back to you and says this is your amount of forgiveness, your delay in paying those employer taxes is over. Any portion of the loan forgiven, of course, will be excluded from cancellation of indebtedness. So this is a big item. So typically when you receive cancellation of indebtedness, that is a taxable event. And part of the CARES Act was to exclude this from being part of your gross income. So not only is it forgiven, but it's not subject to tax. Now this, usually after that conversation, we get to the question, well, can I also deduct all those expenses that were part of my forgiveness? And that, of course, is an area right now where there's more uncertainty. We're not sure. You know, there's code sections that point us in one direction and say, yes, you should be able to deduct them. And there's other code sections that point us in the other direction and say, no, you can't have exclusion of income and take a tax deduction. So, so that remains to be seen. Again, we're uncertain on, you know, what happens to partnership and S corp basis too. You know, does that reduce my basis? Does that tax exempt income, does that increase my basis? Those are things that that we need guidance on as well. Next slide. Employee retention credit. Again, I mentioned this before. So if you happen to, for some reason, you didn't get in on PPP, or you just didn't really find any reason where it was compelling you to go for that, you know, employee retention credit is probably the second best option to look at in terms of if you still have your employees on payroll. So again, this is a 50% tax credit. And as you can see, it's running from March 13th to the end of the year. So if you happen to have an employee that reaches $10,000 in wages, that would be your cap. And so your cap on the credit would be $5,000. And there's no limit to the number of employees that pertains to. It's just a $10,000 individual wage limitation. There are a couple things that you got to look at whether you're eligible for this, and one of those is whether your business has been impacted by COVID-19. So that could be a number of different things. Partially shut down, maybe you were totally shut down. Maybe you're a restaurant and you're only able to to do curbside versus being fully operational and open. But you got to show that you were somehow detrimentally impacted by COVID-19, or you have to have a 50% reduction in quarterly gross receipts. So that would be comparing a quarter in 2020 versus that same quarter in 2019. So if you did $1 million last year from in the second quarter, and this year you did 500,000, you're probably in that bucket of being eligible to take this employee retention credit. Again, it's limited to 10,000 per employer. There are two different, I'll call it two different buckets. So you have employers with 100 or fewer, and then you have the employers with over 100. This becomes a pretty simple calculation for those that are 100 or fewer. It's simply the number of employees times the 50% times their wages. Obviously, you got the $10,000 cap, but it becomes a pretty simple calculation. For those that are more than 100 employees, it becomes more complex. So you have to track your employees, especially if you've got, let's say some of your employees are they're working a couple days a week, and then the rest of the week they're not working. You only get to count the wages for the times that they are not providing services. So, however you track that in terms of your payroll system or your payroll provider, that is definitely going to be key for trying to figure out your credit with regards to this. Next slide. So claiming the credit. So this gets into the mechanics of it, and essentially what you're doing is you're claiming the credit against your employer Social Security taxes. So in calculating that, you would apply. Let's say you've got a $5,000 credit, and your Social Security happens to be $10,000 for that period. You would apply the $5,000 credit against the $10,000 of employer Social Security, and then you would remit the remaining $5,000. So if you happen to have more credit than you do Social Security taxes, then it becomes an overpayment, which that'll get used just like any other overpayment when you're trying to determine the amount that you need to remit for Social Security, Medicare, federal withholding. And so it would go against all of those taxes. So to the extent that you still have an excess, there's a couple options. You can file what's called, this is a brand new form, it's called Form 7200, and it can be filed multiple times within a quarter. So if you happen to, your credit eats through all this employer Social Security, it eats through all the remainder of your federal deposit, and you still have something left over, you file this 7200, and right now you can fax that in and get an advance refund. Otherwise, you're going to be waiting until the end of the quarter. We're told that there's going to be a modified 941 that would allow you to do essentially the same thing, but obviously you can't file that sooner. So it just depends on timing, whether you want that money right now or you want to wait until you file your 941. Employers that receive the payroll protection loan, again, are not eligible for the credit. And if you've had some people that took advantage of the Family First Coronavirus Act and they were off on sick leave or family leave and you took a credit for that, you cannot double dip those wages. So you'd have to exclude those. Any Family Medical Leave Act, which was the prior 45S, those wages are also excluded. And then of course, if you've got somebody that's allowing you to take a work opportunity tax credit, you have to exclude those wages too. So, there are some mechanics to this calculation, as you can see, but if you don't have any of those other things and you're under 100 employees, it becomes a pretty simple calculation. Next slide. Employer payroll tax deferral. So this also has implications with those that have taken a PPP loan. So this, the employer payroll tax deferral would allow you to defer the employer share of your Social Security, and it becomes an interest-free loan, and 50% of your deferral would be due at the end of 2021, and the other 50% would be due at the end of 22. And this also applies to self-employed individuals, and they have the same time period of when they have to make the deposits as well, at the end of 2021 and the end of 2022. So this is something that we got guidance on originally. I think this came out, and we thought, well, if you take PPP, you can't do employer tax deferral, but you can up until the point where, again, you have forgiveness from the bank. So you go through that forgiveness process and you get back acknowledgement that so much is being forgiven. At that point, you would have to stop deferring your employer payroll taxes. And this started March 27th and goes through the end of the year. So you have until March 27th through 12/31 of 2020. So there are some options out there. Again, if you didn't take PPP, you didn't get in on it for whatever reason, these are definitely something that you should be looking at. And they have a longer, obviously, as you can see, they both extend out to the end of this year, so they have a pretty long runway. So there were some other provisions in the CARES Act that could help accelerate some cash flow for businesses if you're impacted by these. And one of these happens to be the acceleration of alternative minimum tax credits if you're a C Corp. So alternative minimum tax was eliminated from the tax because of the Tax Cut and Jobs Act, but to the extent that you still have some credits carrying over, you're able to accelerate those. Next slide. This is a pretty large one right here. So because of Tax Cuts Jobs Act, we were prohibited from carrying back NOLs. And so you could, if you had a net operating loss for a particular year, let's say you ended up with one in 2018, you could only carry it forward. Because of some provisions in the CARE Act, we can now carry those back, and we can carry them back 5 years. So to the extent that you had one of these NOLs in 2018 or 2019, and you had some previous tax dollars that you paid in those previous years, then this is something that you should be looking at. We have some quicker routes to go in terms of getting some of these dollars back too. We've got some extended time to file certain forms that you would normally file for NOL carrybacks. So there's some relief there in trying to get dollars to taxpayers sooner. And there was a limitation on the amount of NOLs that you could use, and that of course came around through the Tax Cuts and Jobs Act as well. That has been suspended. So now you are able to completely wipe out your taxable income with an NOL if you happen to have that much NOL. Again, if you've got net operating losses, you should certainly be considering this. Excess business loss limitation suspension. This was something that got brought in the Tax Cuts Jobs Act that was limiting the amount of losses that you could absorb from flow-throughs like a partnership or an S corp. And so those rules have been suspended as well. And this is an opportunity for some amended returns as well if you happen to be impacted by those. That would have been on your individual return. Next slide. Business interest limitation modification. So these are all the things we're going through that help pay for the massive Tax Cuts Jobs Act. So through that, businesses were limited or could be limited on the amount of trade or business interest expense that they could deduct. And so because of the CARES Act, we now get to go back and recompute those limitations that may have applied. So to the extent that you were not able to deduct all of your trade or business interest expense in, say, 2018, there's an ability to go back now and recompute those. If you had this in 2019 as well, there's an opportunity to change your method of calculating. This is all meant to help those businesses deduct more of that interest expense. This is a big item right here. For the last couple of years, this has been referred to as the retail glitch. And so any qualified improvement property expenditures that a taxpayer would have made in 18 or 19, it was not carved out for a special recovery period in the original Tax Cuts and Jobs Act. So it would have been a 39-year recovery period, which is a long time to be depreciating these. That just got fixed. It is now 15 years, which means it is now eligible for 100% bonus depreciation. So this is a big one. There's of course relief in terms of trying to get the money related to this as quick as possible too, but including filing of a Form 3115, which we use to change to a different accounting method. We have an ability to do that. We have an ability to amend returns. So to the extent that you have this, you should definitely be looking at this as well. Corporations. So if you happen to be a C Corp, for as long as I can remember, you've had a 10% limitation on charitable donations that has now been bumped up to 25%. So allowing those corporations to do more in terms of helping with the COVID crisis. Next slide. And that's the end of our presentation. That's a picture of Bill Burke, who was instrumental in putting this together with the chamber. So on behalf of Tom and I'd like to thank everybody and thank you to the chamber for allowing us to talk. And do we want to kind of take a couple remaining minutes, Tom, to maybe go through some of these questions that have come up?
Yeah. Why don't we run through all the questions that have been posted in the Q&A and chat, and then we'll see if there's any other, I guess, final questions. So
this is a good one right here, Tom.
Go ahead.
If you're going to claim a tax credit under the the Families First Coronavirus Act paid leave. So this is somebody that qualified to go off on either sick leave or family leave act under that. Are those wages, are they going to be able to be included in the forgiveness calculation? I don't know if we've seen that or not.
Yeah, I don't think they're going to be able. I think they're going to be excluded because you're taking the credit under the other program.
That would be my guess too. We touched on this one, 30 or 40 hours for full-time equivalent. We're not quite sure yet which part, which rules they're going to refer to. This is a good one too. So if you prepaid your rent for the year, can you apply the loan to that payment? What are your thoughts on that, Tom?
Well, I think it's going to depend on what they define as cash basis versus accrual, because if they stick strictly to cash basis, then you might need to get creative there a little bit, potentially asking for a refund and then reissuing for those particular periods. So I think that's probably going to be a guidance area that we're going to see something on, but we'd have to see what the guidance is and then adjust appropriately.
Okay. Can you use the funds for all payroll, but only get under 100 grand as forgiveness? So I think they're talking about the limitation on 100% cap. So if I pay somebody 200, do I still get the 100? Is how I read that.
Yes, you would. It's just an excess reduction. So in that example, on a prorated basis, if someone was making a $200,000 salary, 100,000 of that salary prorated over the 8 weeks would be included in the forgiveness gross calculation. The rest would be excluded.
Okay. Is rent you pay to the owners of the building okay if the owners of the building are also the same owners of the business? So we got a related party lease here on the facility. I haven't seen anything that says you can't.
Yeah, we haven't seen any restrictions that related parties are excluded. So at this point, we've been including them in our estimates.
So you'd only have the issue of whether the lease was in place by February 15th of 2020.
Correct.
Yep.
Yeah, correct.
How do you recommend doing the payroll forgiveness if you are a bi-monthly payroll as opposed to bi-weekly or weekly?
We've had that question a lot. I think under the cash basis, again, I think the intent is going to be the equivalent of 8 weeks of payroll. And I know there's going to be some unique things with, what day did you get your loan proceeds, and how will that 8 weeks flow through to capturing your 8 full weeks of payroll. So I think there'll be some guidance on how exactly they're going to define that. It seems a little bit impractical if you got your loan on Wednesday that it's going to start on Thursday, but I think some guidance will clear that out on whether they're going to have an even starting date on a Monday to capture payroll easier, or if they're going to want us to split the first and last week to get the full 8 weeks. That's to be determined.
Remains to be seen. Is there a provision for paying employees the overtime they would have normally been paid while we are keeping them on payroll at reduced production and sales needs?
Again, I think that's one of the guidance areas we're looking for as it relates to bonuses and hazard pay and how to make employees kind of whole. That's the part that we want to understand the mechanics so we don't run into a threshold problem. With that $100,000 kind of prorated number, we want to be sure we balance the mechanics to make sure we comply with both of those. So we're going to need more further guidance on doing that.
Right. So again, it's this is kind of a bunching thing. If you try to pay an employee a whole bunch of compensation during the 8 week period, it might be, you might be able to use your loan proceeds for that, but whether that's going to be in the forgiveness amount, that remains to be seen. My understanding is that the employer portion of FICA and FUTA are not included in forgiveness. True.
Correct.
Correct. For PPP, is the total healthcare premium expense forgivable or just the portion that the employer pays?
The employer portion.
For the full-time employee headcount, does it matter if we use average monthly levels during 2019 or during the past 12 months? I'm assuming they're talking about forgiveness here.
I'm not sure because the forgiveness is based upon February 15th through June 30th of 19 or January 1, 2020 through February 29th. Seasonal folks don't have a choice. It's just the first option, but those are defined periods. So that's our prior period baseline.
You're going to have some limited choices there, is what you're saying.
Yeah, it's one of those for most businesses. If you're not seasonal, you got to pick one of those two defined periods.
Yep.
Yeah. The one you get the choice, whichever one's better.
Right, right. Do payroll processing fees count towards payroll costs for forgiveness?
We haven't been including them in the calculation. I guess that's a guidance, clarification point, but we haven't been including that in the forgiveness calculation at this point.
Yeah, I haven't seen anything on it either. When does the 8-week start? Can I decide? Unfortunately, you cannot.
No.
It's when you, it's I think when you get your funding, correct? When the bank puts your
Yeah.
funds into your account.
Yeah, I think the only guidance is going to come on whether, if you get it on Wednesday, does your period start Thursday if you get it on Wednesday, or will they allow you to start the following Monday just to make it an easy 8-week measurement cycle? So, that's the guidance I would expect. But it's not like you can say, hey, I got my loan today, I want to start, May 15th, because that's when I'm coming back up. There's not that flexibility.
Yeah. Oh, here's a good one. Any idea when you expect to receive more guidance? Man, that's the $1 million question right now, isn't it?
Yeah, we have a firm call at 8 a.m. So usually by 6:30 or 7, I'm on the SBA site, seeing if they've updated the question and answer section. And so, no, I mean, we really don't. I mean, you would think that all this current round of loans is going to be processed this week. So I would think as soon as all the money's out, there's going to be even more intense scrutiny on this forgiveness language. So I would hope by the end of this week, at the latest Monday, that there was someone's diligently working on all these questions and putting together. I think the first guidance update on the bill was 31 pages, focused on the application. I wouldn't be surprised if the first set of guidance is at least that, or could easily double that by the time we're done, because I just see a lot more complexity on the forgiveness side. And I think the SBA is going to be, all right, maybe someone interpreted something a little bit differently on the loan, and, they got a little bit more, a little less than they should have, but it's still a loan. I mean, the forgiveness is a hard number, right? That's the most critical number for both sides. And so I think there's going to be a much higher level of scrutiny on than there was on the loan application process. So anyone's guess. We're hoping later this week, early next week. Because there's a lot of people that have had their money for a week, going on 2 weeks.
Yeah.
Now all of a sudden, the clock's really ticking. So
we need it.
I know we need it badly.
Yep. Steve, you want us to keep going on questions, or you want to?
Yeah, so if you guys just want to answer these last two here, and then we'll just we'll end this. And again, those that are still participating with us, if we did not get to your question, please feel free to send those over to myself or any other staff at the chamber. Ashley Willis from our team will be sending out an email as well with contact information from Tom and Andy and Bill Burke as well over at Rehmann. So go ahead, just those last two.
Okay. For the full-time employee headcount, can you repeat those dates you mentioned for average monthly levels during 2019 or in the past 12 months? So that would be the period in 2020.
Yeah, it was February 15th through June 30th, 2019 is option 1. And option 2 is January 1st, 2020 through February 29th, 2020, option 2. Those are for traditional businesses. You can choose whichever period gives you the better, which would be the lower number for comparison.
Yep. If you received a PPP loan, so if you received a PPP loan, yet your employees are not able to return to work with current stay-at-home order, do you just pay your employees to sit at home? Yes. There's no requirement that they actually be providing services.
No, but it does pose the question is if they're doing better on unemployment, you have to take that into consideration, because, I've seen plenty of places where they've had to call back 4 people and they're making less than what the people are that are on unemployment. So those are kind of more the HR related questions that, you know, there's no one answer fits all, but there is no requirement that they have to work if you decide to pay them for being at home.
Good point. For the $100,000 limit, is it base salary or are commissions included?
It's gross wages. So it would typically include commissions, bonuses, anything in that gross wage type payroll kind of detail. What it doesn't include is it doesn't include the health care that you're paying for them. It doesn't include the 401k or the state unemployment tax. Those things it does not include.
Okay, was this recorded, and can we get a copy of the webinar and presentation?
Yes. So again, thank you everybody that was on here today. We will be sending out, this is recorded, so you'll be able to listen to these two fine gentlemen for another hour and 15 minutes if you'd like. But I do appreciate everybody being on here. Tom and Andy, Rehmann, super complicated, and you guys really have broken it down in a very simple way to better understand how to navigate and really understand and maximize the PPP loan. So we do appreciate both of you for being on here today. Again, for those on the call, thank you. We do have a webinar tomorrow on returning back to the workplace during COVID-19, featuring Warner Norcross and Judd, as well as a business roundtable with Senator Gary Peters later in the afternoon at 1 o'clock. So we'll be sending those out as well. But again, thank you to both Tom and Andy for your time today, and thank you to everybody participating.
Thank you.
Yes, thank you.